Good morning, everybody. Happy Capital Preservation Friday. It's your Friday morning host, Pax, and this is my guest for the week, possibly my new co-host. This is Corinne Riddy Jackson. Corinne is a trader in my group, and she is one of my favorite people in the entire world. I respect her, I look up to her, and I'm very proud to know her. So, hello, Corinne. Welcome to the Place Your Trades Network podcast.
Thank you. Thank you for inviting me.
Let me get through some house cleaning stuff here. Welcome to the Place Your Trades Network. I'm Pax, and this is Corinne, my guest for the week, and we're discussing capital preservation in light of CPI volatility, as well as FOMC volatility, and the all-important, at least for my work, expiration price. Today's podcast is brought to you by Tradeovate, which has built a custom app dedicated to trading event contracts. And this is what we're all using at Place Your Trades. I don't know how to bring it up on screen share, so we'll talk about that later. But because I'm older, I don't know how to work computer stuff. Use the link in the chat to start using the Tradeovate web app. It's easy, it's accessible, and it's free, where you can follow along and you can make your own picks. Make sure you like and subscribe to our channel and set notifications so you never miss a podcast. Smash that like button. I said, people always say that, smash the like button. So I figured, I get to be cool and finally say that too. Smash that like button. Anyway, so listen, the Tradeovate app is very easy and easy to use. It's accessible, it's effective, and it gives me the ability to be able to trade the event contracts without having to overload things. Because like I said, I'm older and I don't know how to, I'm an analog man in a digital world. I don't know how to use this stuff.
Analog.
That's kind of what I am, aren't I?
No, you know all this stuff.
I do not. How many times have I called you to ask you how I don't know. Corinne does like all of my Instagram stuff for the PAX group, and it's really ridiculous. I have no idea what I'm doing here. No idea. Anyway, let's talk about capital preservation. This week was crazy, Corinne, wasn't it? You had, have you seen a week like this with this sort of volatility, all of this important stuff? We had CPI Friday, Tuesday, we had the FOMC Wednesday, ECB yesterday, and then this morning we've got this afternoon we've got expiration and we've got quad witching. Have you seen a week like this in a December? I guess you haven't been trading that long, so maybe you haven't. But the volatility has been extreme.
Yeah, no, it has been very extreme. This is a lot for December coming towards Christmas. And I guess going into it, I thought I was maybe more so bullish because there would be a Christmas rally. And we kind of had one. I don't know. What would you say? We had a Christmas rally, Matt?
Christmas rally is usually like later, going into the last couple of weeks of the year. But I was expecting one too.
Yeah.
I was very bullish. I tweeted about it, in the last few weeks, the last couple of months since I've been in here, I've been talking with Blaine about my targets and my levels, right? And it's the same levels, the same targets that I talk about every Friday because we're still stuck in the same range.
Yes.
But it's go back, you guys, if you think I'm making it up, go back and watch previous episodes. But it's 36.63 to 37.26 S&P.
Right.
30.26 above that to 38.71 above that to 39.12 above that to 40.05 above that to 40.99 and 40.99 above that to 41.77 to 87.
Right.
So what we had opened up, just to recap the week real quick, we had opened up CPI was if you look at this is another thing. If you look at two different daily charts, and I showed you earlier, if you look at two daily charts, you're going to get two in the S&P. You're going to get two really different looks. If you're looking at a regular trading hour chart, which I do, and if you're looking at the all sessions, if you're looking at the E-mini S&P, so I differentiate by calling it the pit chart, which is regular trading hours, and then the all sessions all night long. So the pit chart is a gigantic red candle, on a daily. The all sessions, the E-mini S&P, the 24 hours session is a green candle with the long wick on the end of it. We were trading around, I can't remember exactly what price. We were trading around 40. Where the hell were we trading? Oh, we're trading around like here. That doesn't matter. We're trading around 40.50, I think. And then the market exploded all the way up to 31 or to 41.80, right up to our flat zone. So 32, I talked about this last week. Two targets that are flattened zones where I'm going to completely flatten positions if I have anything on will be 39.12 and 41.80. Yep. We got right up there on Tuesday. Now, opening range on Tuesday gave us a wonderful trade, and this is where price action starts to look more bearish. Opening range on Tuesday, CPI day, was 41.35 to 41.41. The high of the day was 41.41. And that is, that when the high of the day is made in the opening range, what is that? That's a bearish look.
Oh,
bearish. Right. Bearish look. The high of the day is made in the opening range. It's a very bearish look. We came out of the opening range 41.35 offer. So we got short. We got down to that first target, 40.99. We took profit. We got under there. Some traders in the group added. I didn't.
Yeah.
And we took it down to, some guys are still short, but we flattened at 39.12 yesterday. 39.12 was that next flatten zone. So we completed this huge wide swing in just a few days.
Right.
Now, FOMC volatility helped. We were trading around the 200-day. It was the battle for the 200-day in the S&P, which is 40.36. And the market was battling between 40.99, 40.36, 40. Boom, they fell apart going into yesterday's open. And I didn't see that coming. I really still thought that they were going to try to find a foundation from which to try to rally from going on into, the Christmas rally, the end of the year rally. Doesn't look like we're going to get that. And it was a scary, it was yesterday's kind of a trade to me is scary. When there isn't much liquidity and the market just sort of drifts lower. Those are scary days. And, it was an easy opening range trade yesterday too. Mm-hmm. I forget exactly what the opening range was yesterday. Oh, it was 39.74, right at our 39.74 level. 39.74.75 was the low of yesterday's OR. And it underneath there, we're short from 39.74 to 39.12. And that's where we ended up, coming down to, and I forget what the low was, but just below that. Mm-hmm. And now we're trading down to 38.71. The most important thing about the rest of the week is not quad witching to me, because that doesn't, we talked about this earlier, that doesn't do much for me. Capital preservation is going to tell me to stick to my process, to trade my process and only my process. So I'm going to take 2 attempts. I'll cut my size if I don't find it, 4 more attempts, and then I put myself on the sidelines. Do you find yourself having a hard time protecting yourself with our 2x4?
Yeah, well, Matt, I mean, you and I have talked for a long time, and I used to, oh gosh, I used to overtrade these days. And when I traded options, I used to get tore up. And so from what you've taught me and many people about capital preservation, it's just taking a few attempts. You don't have to catch every single move that the market does. Every tick, you don't have to be fully involved. See what the market is telling you. And when you see matchups within our targets, how we do, and when you see that wave of momentum, that's when you go in. You don't need to be involved into every tick of the market. And so, oh gosh, that has changed my trading so much. I've been trading for over 7 years, but just from, options to futures now, oh gosh, totally different. Thank you.
How long have you been trading futures? How long have you been trading futures?
Oh, since I've been with you about 2 years. Yeah.
You've been with me 2 years?
Has it been? About, I think this February will be about 2 years.
Like yesterday.
Yeah, I think so.
All right. So this is something I've been thinking a lot about. I've never been an options trader. I've never once made a trade in SPY. I've traded S&P options, NASDAQ options before, but I've never made like a SPY trade. Mm-hmm. What is the main difference to you in the way that we trade? Maybe, just trading futures and trading options. To you as an independent trader, mm-hmm. What's the difference between them, and what do you see as the benefit to trading futures versus SPYs?
Oh gosh, you have more liquidity, in my opinion, in futures than options. And I traded more so tech stocks, and I traded some copper, some gold and silver. And so, of course, just going from tons. I went from tons of indicators to down a few indicators that worked for me. And so from that to trading on the DOM, the perspective is totally different, but I see things more clearly in momentum, immediate momentum, and then just waiting a few days. And Matt, what you have shared as far as swing trading, like that changed a lot. Because I know there's a lot of buzz that goes around. People talk about that swing trading is more so on a time basis, but it's not. And I think a lot of some traders share that, and some traders have a different perspective of swing trading. So can you just share again? Because I just love your perspective on like the time and swing trading and all of that.
Well, I'll ask you guys to define what a swing trade is, because most people are going to say that a swing trade is a trade that you hold for a day or up to a week or so. I think I forget what the general accepted definition of that is. But to me, a swing trade is from one of those targets that don't change, 39.12 to 41.77.87. That doesn't change. Those targets will be in my plan for forever. As long as I'm trading S&P and we're in this area, 39.12 will be a target for me. So swing trade to me is, the swing from 37.26 up to 39.12. Another swing once we close above 39.12 or we get two closes above that elects a move back up to the next swing target, which is going to be 41.87. And again, these prices don't change. So you guys can write these prices down. They're not going to change for 41.77.87. There's a lot of different stuff coming in there. But for my purposes, the exact price is 87. So 39.12 to 41.87 is a swing. Now, that swing could take a week. It could take 2 weeks. It can take a month, depending on the volatility, or it can take a day, as we had literally this week or 2 days. And then I'll have smaller swings like 39.12 to 40.05. That's a swing. 40.05 up to 40.99. Those other bigger targets that will also be in our plan, but they're not to me, they're not flattened targets or targets. Another thing, we don't fade markets, right? And I mean, ultimately our process will give us trades that will look like to the outsider will look like a faded trade. I'm going to fade a rally or fade a break, when really we're just trading our process. I'm getting long out of the opening range in a move that broke 100 points. But we don't fade markets. But using these targets gives me the ability to be able to take a counter trend move at these levels. So if I'm flat coming down from 40.99 to 39.12, what I'm saying is I can get long. I'll use 39.12 as a level to get long, because it's one of those flattened targets for me, and I can turn it around and I can get long. That's one of the things that Jake did, the trader in our group, Farmer Jake, in that summer rally when he made a ton of money, and then again in the fall when he got long at 36.63, 37.26, and he just kept taking profit, adding at these bigger swing targets and adding above them. When the market would come back and test the level, as it did July 14th, I believe, when we came back down to 39.23.75 as a low, down to 37.23. We came down to 37.26. He got long more, using those immutable targets, those flattened targets, as a place to initiate your trades going the opposite way of whatever the OR is that day. I don't know. I might be getting too far in the weeds, but you and I can talk about these things forever and a day, because this is what trading is about. In light of this week's, I wanted to make mention of this too. In light of this week's craziness with the traders that were pumping and dumping, I've tweeted about it. Anthony Crudele's tweeted about it. Many other traders I've seen tweeted about it. There is no easy answer in this business. This is not a get rich quick scheme. And I don't know how you guys can tell who's real and who's not real. I don't, even if people are, we've got a good move happening now. Bonds are getting smashed. Even if people are posting their P&Ls, it could be a P&L on a simulator. It could be all kinds of fake documented stuff. The only way that I know to tell if somebody's real is if they share their pain with you, if they share their experience with you in all of its forms and everything. And that's the way to tell. I made my first million when I was 29 years old. I made life-changing generational money when I was 32, 33. I was going to retire at 35. I got divorced at 34, remarried at 36, and I was driving Uber at 40. And I've spent the last 12 years, 13 years rebuilding my business, rebuilding my life, one trade at a time to, as I've talked about in the Alpha Mind podcast, one brick at a time, right? Building a solid foundation of my life so that no matter what happens, capital preservation will reign, and I'll be able to trade these markets effectively, going back to your point earlier, that I don't need to make my fortune today. I don't need to overtrade to try. I don't need to be part of every wiggle or every move. And you know what? To segue, this is a good time to segue into the event contracts and how important and how cool they are, how important they're becoming. I don't need to be part of every wiggle and every move. But if I have an idea as to where the market is going and what the market is going to do, I can go ahead and I can use the event contracts for a yes or a no. I can say that the market is either going to rally or the market is going to break, and I can spend, because remember, we don't lose money, right? We spend money. We don't lose it. We spend money. So I can go ahead and I can take a trade, a binary option trade, that yes, we are going to close above 39, 39 even, 39 half, or no, we're going to close below 38 half. So the event contracts are great for that. And I don't, guys, find the link, download the Trade-Evade app and open up your account and see what we're talking about. You can make some pretty good money being involved in these markets without having to over leverage, and going back to what Corinne said earlier, without having to try to be part of every wiggle or every move. I'm talking too much. I always do. You're supposed to stop me and bring me back.
Well, you always have great things to say. I mean, it's right. You don't want to do too much. And you've talked about how, you've hurt yourself on a Friday by overdoing it and trying to make back losses. If it's gone, it's gone.
Oh.
You can't make it back. Don't try to force it yourself into making it back. I know from my trading, I'm more so very defensive. I used to be very aggressive, and so now I'm very defensive, but now it's just managing when and where to be defensive. And I'm happy and content to know that I don't have to be upset with the market if I'm not getting out of what I want from the market, but just saying, okay, today's Friday, chill out, just see what the market's going to do, especially today, going into the weekend, because I think next week will be important now that we're getting through all this. So, yeah,
great point. And by the way, balancing being defensive with aggression. Where am I going to be aggressive? I've got to protect myself all the time. The markets can't hurt me. I'm not afraid of the markets. And people would say you have to have a healthy respect to the markets. I really don't buy that either. I don't have to respect the markets. I don't have to like them. I don't have to hate them. I don't have to fear them, because the markets can't do anything to me. I respect what I know, what kind of damage I can cause myself in the markets. And I know what kind of problems I can cause myself, because I've caused myself huge problems, and my family is as a result. But if I slow things down and I look at using, like you're saying, using our process and taking that balanced look at the market, everything the market does tells me something about the market. And going into quad witching today with a record number of options. I'm not an options guy, but a record number of options expiring and whatever, however that works. Again, the only thing that I care about today is going to be the expiration price for the indices, because that's going to be our major pivot for the quarter. Anyway, as we go into it, people will always talk about the volatility that it creates. It's not volatility that you or I want to take advantage of. It doesn't fit our process. It doesn't fit our methodology. I don't care about a 10, 15% wiggle on a chart. That's the stuff that I actually stay away from in general, especially on a Friday. So very important, especially on a Friday. But I can use the event contracts to be able to give me something, using expiration where we still have a 20-point spread between the March and the D's contract. So where are they going to settle it? What's this expiration gap? How is this going to happen? And we'll get the expiration prices sometime after the close. It'll be 4 Central, 4:30 Central. That's when expiration prices are not found on charts. So they're not the last traded price. It's a price that the CME puts out. It's so very important. But anyway, I'm talking too much. So when you're dealing with balancing that aggression with that defensive nature of your trading, how do you decide when you want to take a more aggressive approach? How do you make that decision?
Mainly at our expiration targets and then our big targets is when I may want to be a little more aggressive. And thank you with your mentorship has helped me with through all this. So usually at those bigger targets, because of course the price action kind of is a magnet to those targets. And so that's when I may want to add more aggression there, or when I see matchups with the NASDAQ and Russell. And I like what you talked about, again, the being aggressive, because you said something last week or so, maybe when you were with Penny, but you talked about being eager versus being aggressive. And I don't know, that's stuck with me since then. And I don't know. Yeah.
What was it? What resonated? Do you remember?
Oh gosh, I think it's just knowing the difference being eager versus being aggressive. Am I forcing myself to trade, or am I being forced to trade? And you said that for a while, and I just love that, because that's just helped me to decipher whether I'm forcing myself into the market, or maybe again, like today, busy week, just take a step back and look at the price action is good enough. So also, oh gosh, you've also said get out when you can, not when you have to. And that is really important. Don't let a trade just go off and create something that's supposed to be a winner turn into a huge loss for you. And I know when I was options trading, I did that several times, but I think a lot of people need to hear that. So.
Oh man, that is so easy to do, right? You miss your route, or you hesitate on your route, and then the market starts to run against you, and you're just kind of stuck,
Right.
whether you freeze or whether you're deviating from your plan. You're hoping, and hope is not a plan. You're averaging, and people who average their trades end up living underneath the Fullerton Avenue Bridge in Chicago. It's not a good scene. Right. When the market is running against you and you miss your out, price is irrelevant.
Right.
Price is irrelevant. Get out when you can, not when you have to. In these markets, oftentimes everybody's going to have to. That's become my mantra. Whistleblower Rip RIP says that's my mantra. Get out when you can, not when you have to.
Yeah.
And we can't share screen share because I haven't figured that out yet. So I can't bring up the app onto the screens. But for those of you guys who are following along, let's look at the strike list and make some picks, okay? And again, my apologies. Next week I'll have this fixed. But strike list is going to be, where are we trading? 38.85. All right. So we've got 38 quarter. I would take and those are going to be cheap. I would take the yeses on 38 quarter for very small amount of money. But I'll balance that out with the nose at 38 half. Anything can happen on expiration Friday or quad witching, anything. Oftentimes, because Anthony and I talked about this in a video at the beginning of rollover. Rollover is less about price discovery and more about what funds and banks and institutional investors with huge positions need to do. It's less about price discovery and more about what they need to do. So we could easily close below 38 half. If I had to take a guess, and that's what I'm doing today, I don't have much of a feel for the market. So I'm glad that we're not bringing up the app because, again, it's Capital Preservation Friday. But I would take the nose of 38 half. I do think we're going lower. I am bearish, and I think we're headed lower. Now, on the upside, I'd balance that out with some 39 50s. Those are going to be cheaper, and they're going to be something to do, and I'll trade out of them during the day. Using the opening range, whatever that is going to be, if we're below it, I would trade out of those 39 halves. I would trade out of the yeses and keep those no's at 38.50. Okay. Now NASDAQ has been a super interesting trade to me. NASDAQ is 11,814 is the big S&P, is a big NASDAQ level. Something we didn't talk about on Tuesday, we had something very, very important that happened. Velocity Logic came in and shut the NASDAQ down. You could not trade NASDAQ futures anymore it was just for a couple of seconds. The market was literally shut down. You couldn't buy them, you couldn't sell it. Velocity Logic kicked in at the price of 12,339, which is the high of the week, the high of the move. You could not sell them anymore. You could not buy them anymore. It was completely shut down. Circuit breakers, the CME group imposes on the market in order to protect these violent moves. We came down steadily below these levels, 12,339, 12,156, 12,065, 11,972, down through the big level of 11,814. The NASDAQ has been leading on the downside. The NASDAQ has been leading all year long, has been weaker. And so I would take, let's see what the strike list is on the Schnazzy. I would take the nose on the NASDAQ at, I'm not getting any, at 11,300. Those are going to be, that's my guess. Again, it's expiration Friday, quad witching. Anything can happen in the markets. I really wouldn't balance the NASDAQ. I wouldn't balance the Schnazzy out with anything because I do think that the NASDAQ is in a bit of trouble. Crude is right now trading at a very important level, 73.45. Crude has completed some great swings on the upside from 73. The swing is 73 double up to 75 double up to 77 double every $2, and in that 75 half area, right? So now crude is trading right in this 73.45 area, and I would take the just because of the price action, I would take the nose on 73 even. But we've got to get below this price area. We've got to get below 73.50. Then we've got another couple of dollars to the downside. So I would take the nose underneath 7,300.
That's awesome.
Sorry for not being able to share screens and be able to show that. But again, like Corinne was saying earlier, it's Capital Preservation Friday and expiration. And we've got an interesting day happening in front of us after an interesting week. I'm sorry for talking too much.
No, that was great. Thank you.
I don't think so. I think everybody wanted to hear more from you and not so much from me. I don't think so. I think I talked too much.
Okay, you're going to kick my butt, but you are the GOAT. I know you don't care for that term. I know.
Oh, hell no. Ask my ex-wife if I'm the GOAT.
I know.
Oh, you don't listen to this. Thank you. I received that and I appreciate that. I hardly think that I am. Look, one thing that I know separates me from many traders is I know that I've only got one trade left in front of me, and that's the only thing I've got to manage, and that becomes the next brick on top of the next brick, which is how we build our business and how we maintain it. We're all in a state of being and becoming a great trader and becoming a great trader, and it's a constant building session. Yeah, see, Anthony wants to hear more from you and less of me. My God, I talked to him for 2 hours today.
No, this is great. This is amazing. Thank you, Pax.
Thank you, Rennie. You know how I feel about you. Everybody have a great week. Have a wonderful weekend as you prepare for the Happy Hanukkah, Happy Kwanzaa, Merry Christmas. Have a wonderful weekend, my brothers and my sisters, and I'll see you all here next week, next Friday. Capital Preservation Friday. Have a great day, everybody.
Thanks. Bye. Thanks.